Greetings and welcome to my YouTube channel. Please do not forget to subscribe, like, and share. Today I'm here to help you guys about accrued expense, right? NDA adjustments, accrued expense. We are only going to focus on that item, accrued expense. What does that mean, accrued expense? What does it mean? It means certain expenditure still need to be paid, or certain amount of a particular expenditure, it is still outstanding, right? So how do we adjust? Okay, how do we adjust? How do we know that or how much are we going to adjust for, right? So firstly, you need to think of the financial period, okay? Financial period is for 12 months, or it is 12 months. Every time before you do anything and you are dealing with year-end adjustments, think of the 12 months period that is going to be given, or that is always there, or that is financial period for each and every business. When we speak about financial period, we are speaking about 12 months, okay? So here we are given pre-adjustment trial balance of childcare traders as at 31st December 2019, okay? So, and the expenditure that we're going to deal with today is telephone, right? We are given an amount of 1,100, okay? So as much as I explained from the get-go, accrued expense means amount of a particular expenditure that still need to be paid or that is still outstanding, right? So now let's see, how do we deal with this transaction? Additional information, right? Additional information there says the telephone account for December has not yet been paid. So it means we have 1 month in our financial period that is still outstanding or that is accrued, okay? So as much as I've explained it to you that financial period is 12 months, it means there is 1 month that is not paid within that financial period of 12 months, okay? So the telephone expenditure that is given there, it means it's for 11 months. It's for 11 months, okay? So we need to calculate the one that is outstanding for 1 month, which is the month of December, okay? So now let's go and calculate telephone accrued expense. Telephone accrued expense, okay? So telephone accrued expense amount that we need to calculate, right? Telephone accrued expense amount that we need to calculate, right? Of which is going to be our accrued expense, okay? So now, as much as I explained that the telephone amount of 1,100 that is given in the pre-adjustment trial balance is for 11 months, and there is 1 month accrued according to the transaction, which is the month of December, okay? So now, in order for us to calculate the accrued expenditure for 1 month, which is the month of December, we are going to say 1,100 divided by 11, because this amount is for 11 months, so that we can get amount for 1 month that is missing. We also gonna say 1,100 divided by 11 months multiplied by 1 month, so that we can get an amount that is missing, for the month of December, okay? So you'll get 100 rand. Okay, you'll get 100 rand. That 100, it's accrued expense. That 100 rand is accrued expense. Okay, so the amount missing there for accrued expense is 100 rand. That is the telephone accrued expense amount, which is accrued expense. Okay, which is accrued expense there. Right. So now, in this case, where do we adjust? For example, let's say you are given or you are required to prepare. Let's say you are required to prepare. You are required to prepare. You are required to prepare income. You are required to prepare. Let me put it there. You are required to prepare income and expenditure. Income and expenditure. Income and expenditure account or statement. Income and expenditure account or statement, right? So remember telephone, it's an expense, right? So let's say you are required to prepare income and expenditure statement. You go under that statement. You go under that statement. Under expenses, right? Under expenses, you're gonna say telephone. Right? So remember, in the income and expenditure, you are going to record the expenses for the current year, the total expenses for the current year, right? So the expenses for the current year, the total expenses for the current year is going to be 1,100 plus 100 that is accrued. Then you will get 1,200, which is the total amount of telephone expenditure for the year. Okay, and then that will be your income and expenditure, right? And then let's say again you are required to prepare receipts receipts and payment, receipt and payments account or statement, right? In the receipt and payments statement or account, you are going to record the amount that you have paid, right? Or the amount that you have paid, okay? The amount that you've paid or received. But here, since we're going to deal with an expenditure, it means you need to record the amount that you've paid, okay? So the amount that you've paid is going to be telephone, right? Telephone there, you put telephone there, okay? You put telephone there. You put telephone there. Telephone. Under payments, né? You're gonna put under payments and say telephone. Okay, and then how much did you pay? You only paid for 11 months, okay? So it means you're going to record 1,100. That is the amount you've paid. That is the amount you've paid. Okay, so That is the amount you've paid. So it's easy. In the receipt and payments account or statement, you record the amount that you've exactly received and that you've paid. So here we're dealing with telephone. They said you only paid for 11 months because the transaction says to you, the telephone account for December has not yet been paid. So you didn't pay for 1 month, which is the last month of the financial period, okay? So in the recent payments, you record exactly what you've paid. You don't record anything except the money that you have paid. But in the income and expenditure, you record the total expenditure for the year or the total incomes for the year, whether paid or not. You record the total. Okay. Therefore, we go to, let's say you are also required to prepare the statement of financial, the statement of financial position, the statement of financial position. Okay. The statement of financial position. Let's say you are required to prepare the statement of financial position as well. Okay, so under the statement of financial position, you are going to record, and remember, statement of financial position is categorized into three. It's assets, equity, and liabilities. So the accrued expense is going to be recorded under current liabilities. Under current liabilities. Under current liabilities. And then under current liabilities there, you are going to write, under current liabilities there, you're going to say telephone, or you can just say accrued expense. You can say telephone, accrued expense, or you can just say accrued expense, right? So a telephone accrued expense is going to be equal to the 100 rand that is accrued, which is going to be indicated as your short-term liability, okay? And then that's all for today. I just wanted to indicate to you that this is how you classify or you adjust. Most of the time you'll be required to adjust this in the statement of income and expenditure or account, or maybe in the receipt and payments or statement, account, and then also a statement of financial position. So you need to know all of this. So that is all for today. Thank you for watching, and please don't forget to subscribe, share, like, click the bell button there so that when I post, you get a notification of each and every video so that you continue learning. Thank you.